As we've been saying, we are well aware of the pain that low crude oil prices are causing, especially in those oil-producing regions of the U.S. But for consumers of oil, it's a different story. So Morgan Brennan reports now on the important sectors of the economy that are actually benefiting.
With U.S. oil futures dipping below $40 a barrel, it's easy to spot the losers, from energy companies to jobs to the ripple effects on the broader stock market. But when oil falls this low, it also mints winners. The biggest being the consumer, whose savings at the pump has been translating into spending elsewhere.
Typically, the first thing you do is you go out to eat. That started to show itself up in restaurant same-store sales. We're continuing to see that in the second quarter and heading into the third quarter.
Consumers have also been plowing those savings into real estate, with home purchases on the rise and home improvement retailers like Home Depot and Lowe's reporting stronger sales. Automakers have benefited in a few ways as well. Last quarter, General Motors sold more trucks and SUVs amid cheap gas prices. That helped the company post earnings that were 4 times better than a year ago. And more Americans are taking road trips. Federal data shows Americans drove more miles in June than ever before, pushing gas use toward a new record. That helps tire manufacturers like Goodyear Tire and Bridgestone. Not only does driving drive up demand for new cars and parts, but cheap oil makes the cost of producing synthetic rubber less expensive.
When you step away from the consumer and consumer discretionary spending, the next place you want to look is enterprise. So anybody that's manufacturing anything that takes energy or needs to be delivered is a beneficiary.
Including transportation companies, which count fuel among their highest costs. Airlines like United Continental and Southwest have seen their jet fuel bills drop, bolstering earnings despite weakness in revenue. And cheaper diesel has made trucking more cost competitive over longer distances with railroads, a dynamic that's pulled some business from tracks to roads. Hogan says between the increased spending power of consumers and the lower cost to move goods around the country, all of these oil tailwinds should have a, quote, huge benefit for 85% of the S&P 500. It's a key point to consider after a sea of red arrows on Wall Street this week. For a Nightly Business Report, I'm Morgan Brennan.